Well, Warriors, let's have a great week. Jordan, how are you? Chiming, hi, Mary, AJ, and Sinatra, and the rest of you guys. So let's go to work. Hello, team.
Morning, Dale.
And
Hey, Ryan. Hey, KMan. So why don't we start with what expectations are going to be for some of the central banks this week? I'll start with the yen, which, we've had a lot of divergence, pull back to support. Looks heavy to me. Anything that the BOJ could say or do that could generate another new high in US dollar yen this week? KMan?
A new high this week, I perhaps doubt it. But of course, we will have the U.S. labor report right after the Bank of Japan. Base case is that
Right.
Kuroda is going to just keep what they have done so far and then let it over to Ueda, but because it's his last meeting, right? But as I've been saying, we have had Kuroda surprises in the past. So is he going to try and help his successor out a little bit and do something about the band or small tweaks? It's all possible, but we have seen last week the Japanese CPI come back down. So there's not too much reason for him to do much, but as I said, he has surprised the markets in the past. I think we have to go into the Bank of Japan really with an open mind and see what they do over there. The speakers have not been hinting at any change, so that's the base case, to have no change. So in that sense, it's possible that we are retesting at least the highs after the Bank of Japan. But for the rest, until then, it's going to be a rangy play, in my opinion. Call it low 135s, high 136, 137, and we're likely going to hover inside that range until Friday.
Okay. Yields, Brian, we talked about this, drew this horizontal blue line before ISM. Then we ended up with a false breakout. Could this play a role in the yen coming off, US dollar yen coming off? Does it help your narrative, your base case for lower yen with this going on? I think it does.
Helps. Yeah, helps my shorts from up top.
That's what I mean.
I was chipping away. It's walking hand in hand with yields this morning. Yeah, I mean, it's technically you'd want it to hold above 4%. If you're looking for yields to rally, you wanted it to hold at 3.98, 4% mark.
Yeah.
In fact, it's come right back under. Could be a little bit of risk coming off the table, as Stel pointed out this morning on the flow show. Market just maybe squaring a bit up with all these events going on. We've got Powell tomorrow, then we've got ADP Wednesday, then Powell again, and there's a lot of headline event influences coming this week, and sometimes traders just want to take some risk off and see how the
I don't know, kind of like as the way I saw it was it added jet fuel to the Thursday reversal for major support on risk. So it wasn't, as it came off, S&P's got stronger. Almost everything did, right? And the dollar weakened as well. So I don't know, risk looks pretty good. After it looks more than surviving a test, it came off it pretty good. Not saying we can't pull back to 4,000, but I think this opens the door with what happened last week, and maybe yields going to 370 for S&Ps to maybe make a run at this trend line up here sometime.
Yeah, well, it's gonna have to be some really hawkish news to get 370, I think, in yields.
Hawkish?
Unhawkish.
Oh, okay. Maybe a weak employment report.
Yeah,
which is the only thing missing, right? That's from really uncorking the champagne bottles would be, oh, okay, inflation's behaving. Now the labor market isn't going to be, it's starting to show cracks.
Well, that shows the risk this week, doesn't it? Let's say Powell comes out tomorrow and he hints that rates might go up to 6%, and then on Friday we get a negative NFP. We're in one of those situations where we run from one side of the boat to the other. 1 minute we're trading 4% in yields, next minute you've got your 3.7 in yields. There's points where traders don't like that amount of risk. So I fear we're going to probably see a lot of sideways action going on today between the ranges, which is good. If we've got defined ranges, you trade between them around these big events, and then when the big events come, you sit back, see what happens, and then you jump in.
Just want to remind everyone watching that's thinking about taking screenshots that these screenshots are the property of ForexAnalytix. Any reproduction of our charts will be met with severe legal consequences. All right.
Well said.
So, huh?
Well said.
I'm kidding. That's what the NFL does, or you go to a movie. Remember, people used to record movies. They go in and they sell bootleg versions of movies.
Yeah.
I think there was a Seinfeld episode on that too. So, okay, I got you, Stel. I got your voice. I remember you talking about down here on the right around the turn, that you'd want to be a seller at 1880 gold. Still feel that way?
Yeah, well, I think, me, my medium-term view is that we're going a lot higher, but I still think that this pullback in yields is corrective. So there's probably profit taking, and there's position squaring, and we've gone pretty far in terms of yields. How far we've gone from 360 something to over 4% in 10-year. So I think this is a pullback. And as yields pull back, it makes sense that, okay, maybe
Metals
they're not doing it
bounce.
today. Yeah, but metals bounce, risk bounces. For the short term, so then for the next few weeks, let's say, my base scenario is that yields are going higher. I think this is a correction. So
Okay.
as long as that's happening, I think I want to be selling gold for a short-term trade at those roughly the levels you talked about. So 1860. Let's have a look. Yeah,
Okay,
we
so
have
is your hawkish view on rates, and I share it with you, the cause for your bearishness or hesitancy to get long on breaks, and you'd rather sell rallies until you believe rates have peaked?
something like that. Yeah, I mean, I eventually want to get long, and that's testament to that is the fact that I have been slowly accumulating silver. But when we get to levels like that, at 1870-ish, where we have the 50 DMA, it's always also a fib. I need to go check my chart. I think there's a fib there as well. But that's not a bad idea for a short-term move. But for the medium term, I want to be accumulating longs, and that's what I am doing very, very slowly. Because at some point, rates are going to peak. We were talking about this in the flow show this morning. When 1 year US is 5%, that starts to look pretty attractive for investors, right? And I had a chat with a couple of friends of mine who are very wealthy. They're not traders, but they have money to invest, and they're both saying 5% for a year. Yeah, I'll take that. Obviously, inflation is higher than that, but when you take a trade like that, you also take a view on inflation. Do you think that inflation is going to stay at 5, 6, 7, 8, 10%? Well, if you do, then obviously buying 1 year paper, at 5% or 2 year is almost 5% as well. Then, if you don't think that inflation is going to be high for a lot longer, then it makes perfect sense.
Okay.
So I think yields will peak, but I don't think we're done quite yet, because the Fed has not told us that. You know, they're still getting some mixed data, but the ones that count, let's say, which is inflation, it's still not dropping. I am expecting inflation to start dropping. I was talking about this months ago. I was talking about the end of Q1 of this year hasn't really picked up the pace, which I thought it would have, due to the calculation method. I know Jim Welsh was also talking about this on Friday's interview, exactly the same thing. So I'm feeling happy that he's thinking the same way. I do think that the year-on-year CPI reading is going to drop. I mean, unless things change dramatically with the way, with supply chains and with the way, products are sourced and generated, unless the power of the price of energy goes to the moon, I think mathematically only speaking, the CPI year on year has to drop. It's just mathematics 101. Obviously, I can't be 100% sure about this, because nobody's 100% sure about anything, but except death and taxes. So that's my view. So I think for the next few weeks, yields probably start picking up the pace again to the highs, and then that's, I think, the terminal move, and then we start dropping, and and then the dollar finds a proper high, and then starts to drip lower. So, but for now, I don't see what has changed in the macro environment. I don't see why the Fed and Jay Powell is going to really change his tune. Maybe he will, but I just don't see the reason yet.
Look at this bond chart here. Nice call, Jim Welsh. Okay,
Yeah,
I told you guys about it before the ISM. He went in and bought TLT. Look at this island bottom here, and then look at what happened here. Island bottom here, and I think they're going to open, almost a full point higher. So, are we going to have the longer term interpretation, which, maybe it just means a more extreme yield curve inversion, is that, this is all a corrective wave, and this was the first part of it, and now you've had this move sideways, and that we could have something like this from here. That could take long-term yields down pretty good. That was like 92.20. Take TLT back to 120 as a possibility. Especially, it's just what it measures. Some people will get aggressive and big round numbers, 90, right? Flat top, 110. Measured move on a 110 breakout, 130. Maybe it's gunlatch time. And, everyone started to think that maybe it was wrong because, of what happened in the 10-year, right? 10-year made a new high. I mean, was, really a more impressive rally, but this hasn't either. So it's really going to be interesting to see if that turns out, this pullback, and we go to new highs, what happens to the long end. Anyway, that's kind of a constructive chart, the way I see it right there. Blake, you think that's a constructive chart?
He's actually going to be back in about 5 minutes. He just wrote in the chat.
Okay.
I was going to say, we have Humphrey Hawkins this week. So Paolo speaking, we also have payrolls. So it's going to be an important week, and we definitely could get reason for yields to drop, definitely from the data. But as I said before, for me, I don't see why Powell should say something different. So I will take that out of the equation. Then you're left with the data, which obviously can do, it's I don't want to say it's random, but I'm not going to guess what the numbers are going to be. I'm not a guesser.
Okay. So anyway, that was a pretty big play. Crude back at the top of its range. I think it could get to here 82.5 or so, maybe. But just trying to come out of here. I'm neutral on that.
Well, 82.5 is a big level, and if that goes to the upside, then that's going to increase price pressures, isn't it? And it's going to increase perhaps central bank hawkishness. So we have to observe what oil is doing very closely.
I'll say one thing, that this, this whole thing was the euro gave back whatever it gave back, and whether it's through giving back or not, is molasses and giving up ground grudgingly. Even more so in, look at this range. Even if you want to expand it, you're talking about a 400 pip range in cable since November. It's a quiet market, but it looks more like consolidation to me than, oh, we're going to have a big drop. It almost makes me think that even if there are a stop hunt under these lows, that this thing bottoms around 118 and then makes a move to clean out the bears, because there are a lot of bears, because most of the commentary about cable, you hear about all the negative fundamentals. People talk about all the economic problems in the UK. So I think people are fundamentally more bearish cable than they are euro. Am I reading it correctly? Is that the way it seems to you, Ryan?
Yeah, well, the UK is always, let's say, downtrodden, even mostly by people in the UK. So yeah, it's a sentiment. But here and now, we've seen what's happened. It's a yield situation across the globe. This higher for longer stance coming across. I still think there's a significant risk that the BOE is forced to hike further than what they're saying now, which could be a little jolt for the pound. Not sure it's a jolt in cable, but the cross is definitely. But yeah, like you said, we're sitting in the middle of stuff.
Yeah.
Again at the moment.
Yeah. Well, I think the interest rate move in bonds was interesting, and I have to think, I thought about this, that, if you didn't buy this low in gold, I have a different view than Stel. I think that this wasn't just an important pullback after, what did we run? $350 run from 1610 to 1960. Yeah. So to me, this looks like a correction in a bull market. And then the way it held, it's important it holds here, or Stel will be right. If we take out 1800, maybe we are going to 1750. But I'm going to view this, see how it held, major weekly, 50-week moving average. That was the low last week. So say you go, oh, you know what? I missed it. But you know what? It's a better trade now on a pullback than it was bottom picking it, even though it worked, because you have at least a reference point for risk when buying a pullback, should we get one this week. So there's
Dale, sorry, Blake, just one thing. We agree actually on gold. I think we are in a pullback before the next leg higher, but I'm just saying
you don't think it was this.
I don't know. I'm not gonna do that. So if we get to 1870, I'm gonna do a very fast short for not for a big move, for something like 20 or 30 bucks. So it's gonna be a very, very short term trade. Yes, hello.
Do you know why we stopped at 1860?
Why?
That was a 618 retracement. It's always a 618 retracement.
Yeah.
It always is.
You mean from the high? That doesn't look like it. From here to here, is this a 618?
Yeah, no, it's from the flag pattern lower. So it actually see that last little spike. I'll show you guys, but it's all right.
Yeah, go ahead, grab them.
Yeah, but
we're on the topic.
But here's the thing.
Is 50% of the move lower from 1960 down to low 1800s, 1864.
Yeah, so this and just so you guys can see what I was just talking about, and then we can actually do a couple of things here. First of all, this is a flag pattern, and when this is the breakdown point, that's like the actual breakdown point. There's a 618. Here's the here's the fib from the top of the flag. Now what KMan you're probably noting is, well, maybe not. There's about a 38% retracement that we're coming into. So I've been focusing on that 618 all and the breakdown point all last week. If you're looking at our bias chart, it said 1860 every day of the week last week. And so I still think it's key, and I think it's going to be kind of pivotal for this week, right? I mean, it's all about what happens tomorrow and the next day. I think the next 2 days are going to be pretty important to set the pace for the week. And although I haven't been, I had been away from the computer for the last few minutes. Did you guys talk about Powell this week?
Yeah.
And your thoughts?
Just barely. Not any expectations of what he might say.
Well, I have expectations. I mean, but I would love to hear if you guys have any, because I think a lot of people are going to expect that he is going to continue to be pretty hawkish. I mean, doesn't he have to with the data that we've seen recently?
That's exactly what I said.
Oh, I'm sorry.
That's exactly what I said. There's no reason for him to change the hawkish view yet.
Right. Exactly. So I think you have to go into this week with that expectation, and in the event that he comes and he's a little, if he's a little bit more dovish or said, references seasonal, whatever, and sounds more like they've got this situation handled, that would be a pleasant surprise. But I don't think we should go into this week with that expectation that he's going to have that change of heart, right? I think he has to continue to talk really hawkishly this week, right? But anyway, that's my thought. Ryan, KMan, do you guys have any thoughts to that?
Yeah, well, it's difficult because the last few times he's had appearances that are not FOMCs, we've all said he should do this, he should do that, and he hasn't done it. When financial conditions were easing, we all said he should come out and talk against it. He didn't. He's got his message. This testimony is on their last monetary policy report. It's how things have gone over the last 6 months or whatever. And very rarely do we get comments dropped that are new, i.e. him turning around and saying, oh, rates are going to go to 6% or something like that. So it will be a bit of a shock if he does stray from the script, the current Fed script. But we never say in these things. So I'm of a mind that he's going to be along the party line that he has been the last few months. And if we do get anything, it'll be a bit of a shock. The market may get a bit disappointed that it doesn't get something hawkish.
Well, here's the thing. You have to imagine. Here's Powell sitting in a chair in the hot seat in front of politicians, and all they hear from their constituents is inflation, 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 high prices, high prices, high prices. He's going to get the absolute crap kicked out of him while he's on the stand. He is absolutely going to get mauled. Rates at home rates where they're at, housing prices are starting to slump. He is going to get absolutely destroyed. And for him to step on stage and say, yeah, I think we got it handled. It ain't happening, guys. It is not happening. No way. He's going to get so much pressure, and he's going to have to say, we are continuing to, keep rates high because we're going to fight inflation, and we're going to bring, back down to 2% mandate. There's no way he's going to back off. Not in his rhetoric. No.
I don't think anyone's saying he's going to do that, but people are looking for more. People are looking for him to turn around and say rates are going to 6%. We're going to do more than what we're doing now. And I think that's the question. If he's going to be hawkish, how hawkish can he be, and will he be? More than what we already know. They're going to keep rates up higher for longer. We know that. So where's the new bar above that? What we already
don't know. But stocks don't seem to care. I guess that's the thing. So I kind of look at this move higher in the stock market. By the way, we as we talked on the week ahead video, perfect pivot off of the 200-day moving average. You know, it's the market actually hit exactly where it should have and rallied exactly where it should have, from channel resistance, previous resistance, 200-day moving average, all that stuff. It was perfect. 38% retracement. I mean, you couldn't ask for any better technical setups last week for us to reverse. But is this a little bit, you know, too far ahead of Powell? I don't know. I would be selling strength. That's the way I'm looking at it right now. I'm not doing anything at the moment. I'm just saying I would be selling strength. You know, one of the positions that I took off this morning was a long Euro Aussie, because it actually should perform well. I took it off this morning. I was long from last week, and I took it off. The reason why is because we're approaching such major resistance, but this is one that will act very well if stocks turn lower, and this is one that is definitely on my radar. And I want to be aggressively long, actually, the Euro Aussie, but we have you know, what's happening tomorrow is one thing, but we also have the RBA this week, which is actually tomorrow morning, tonight, if you're in North America. So just keep that in mind. I'll probably be in the ForexAnalytix chat room when that happens this evening, matter of fact. Well, we got just a few minutes. I was running a little bit late today, so I appreciate you guys you know, being here and you know, discussing everything. Dale, we got a busy week. What's your big idea for the week?
Buying a dip in gold if offered, and silver. Wait to buy silver until the gold silver ratio makes one more new high up here for a 3 drive, and then silver will become the preferred long. But I think you could buy both, and gold, I'd say 1830-ish would be a nice entry. So to time the silver price, I'm just going to use the gold silver ratio. When it's at 90, I'll look at where silver is and just buy it.
Awesome. Okay. All right. Stelios, what's your big idea? And don't even say silver. What's your big idea of the week?
Try
something else, man. Try something else. Reach in your pocket, deep down. No playing pocket pinball. Go grab something and bring it to us.
My view, as I said before, is still that yields are going to be going higher. This is a correction, so I'll be looking to sell rallies in bonds again for a short-term trade, not a medium. That's not my medium-term view. So if we get 10-year US, maybe retracement 38.2 at 380, I think that's probably a nice level just to go. To get short there. So I think this is a correction that we're seeing in yields lower.
Okay. If you guys are in the ForexAnalytix community, we call that a monkey pattern. It's actually a cipher harmonic pattern, just FYI, which is a reversal. Should give us a nice bullish move, probably to the 50-day moving average. So if you think bonds are going to bounce, yields should continue to come off at least a little bit. But I mean, that's technically, but anything can happen after the next couple of days, right? Ryan, what's your best idea going into this week?
Just change the ranges, really.
Oh,
there
there
are a lot
he
of
is.
events. You know, we haven't even touched on the RBA, ADP, Bank of Canada, Bank of Japan. There's so much going on.
There is.
I'm not, apart from managing my positions, I'm not going to be taking anything too long a trade. It's just going to be sniper rifles at the ready.
All right. Well, if you guys are following the RBA, just remember that is tonight, as Ryan just said. We do have a bear flag pattern, B, inside of a head and shoulder pattern, which means that's like a double bearish setup. And remember, the RBA is one of those central banks that is actually a little wishy-washy as far as being hawkish. They're actually, they're more on the we're pretty much finished camp. So if this seems like this is their last rate hike, you might actually see the Aussie come under some pressure here. KMan, what do you think? What's up on your radar for the week?
I'm eyeing Euro crosses, and Euro Canada and Euro Aussie are both on my radar, with the RBA and the Bank of Canada around.
Yep.
Especially with the ECB hawks still very, very vocal. And I'll keep an eye on that Euro yen as well going into the Bank of Japan. I'm not sure about the dollar right now. The only real dollar I'm long is dollar rand, because I think the geopolitical and internal situation is a total mess. And yeah, those two crosses, Euro CAD, Euro Aussie, are on my radar. And let's see what Powell tells us. I think he's going to traditionally, as he does, walk the fine line, but there may be a couple of things, hints at the market saying like, I told you so, you didn't believe me, now you have to reprice. So that may put a bit under the yields again. That is a little bit of a risk, but I think looking at what we've done already on those yields, if you look at the move just February on the US 10s, it's pretty massive, right? So it's a bit logic that we have a setback right here and now. And now it's over to Powell and what the NFP report will tell us. So I'm a little reluctant to really dive too deep into anything.
Well, KMan, it's good to hear your voice. Sounds like you're sounding much better. Let me just really quick. I just want to tell you guys, the Mexican peso sentiment is very extreme. I bought some last week, got out of it, and then whoops, I'm going to actually go back to that here in just 1 second. And then I bought it again on Friday because A, we're at channel support, B, very divergent relative strength, 161% extension. So I started buying it on Friday, but you just saw a little alarm go off on the Euro Mexican peso. This is, let me make sure I've got it on the right. Well, I'll just do it here for you. We got a little false breakdown here, and I'm thinking about getting long some Euro Mex. KMan, I know you're a fan of trading that pair as well. And you can see very oversold relative strength. Like I said, sentiment index is way extreme right now.
Yeah.
So I'll take it for a couple of days, and if we get a little bit of risk aversion, I might end up taking it for a couple of weeks. So there we go.
Yeah, I'm actually praying for it to go back up to sell it again somewhere.
Yeah, I mean that's what we ultimately what we want is we want to see these rallies so we can actually buy Mexican pesos or sell these into strength. But we're just hoping that we get some strength and can play counter trend. So guys, I'm gonna leave it at that because we are past our time. I just want to say, Stephen, I don't want to say your last name as I don't do that with clients around here. I want to say congratulations. He just passed the assessment for the trader funding program literally less than a half an hour ago. So I want to say, Stephen, congratulations. You will now be trading our cash. And so to learn more about how you can trade our money, check out the trader funding program because you actually get ForexAnalytix inside of that package because we don't want to leave you alone. We want you inside of our community. We want you chatting with us and seeing what we do throughout the day, you know, and knowing who's trading what. And here's our chat rooms. There's a general chat room. We have our trades room. You can say, oh, look, Blake just got out of the Euro Aussie here. And there's his open positions, you know, or other traders in this community. So make sure you check us out. Check out the trader funding program. With that being said, Dale, have a great interview. And thanks, team, for being here. Have a great week, everybody. We're going to be here every day this time.
You'll never trade alone.
Nice.
Again. Where's the last? Isn't there one last word in that song?
You'll never walk alone. Walk. But anyway, so we will never leave you alone ever again. So if you like privacy, don't do it because, you know, you'll come out of the bathroom and we'll have our iPad showing you a chart. So thanks, anyway, Dale. All right, Blake.
All right.
So if you're lonely, there's a good reason to join. Anyway, thanks, team. I'm a little punchy on Mondays, Blake, you know.
Yes, you are. It's like you're almost punch drunk.
Well, yeah. Oh, shoot, I spilled the bong water on me again. All right, listen. Can you help me promote Okan Abar, who's our guest? I've tried, maybe he doesn't see it.
Let me see if I can do that.
Okan actually asked if we could wait 15 minutes. There he is, for him to get to his office, and I said no. So you better have something good.
Where's he at?
I don't know.
I'm sorry.
Is he Turkey or Chicago? Anyway, Okan, how are you?
Oh, you got him. You got him. You got him. Okay.
Yeah, thank you, Blake.
Yep.
Hi, Okan.
Hi there. Can you hear me well?
Yeah. Are you on a phone in the car?
Oh, no. I'm fine. I'm in somewhere else.
Okay.
I'd like to. So I'm okay to speak right now and share my opinions. And I prepared some.
How about sharing your screen? No?
Yeah, I'm going to share my screen with you.
Oh,
Let me open the screen I have here. Okay. Okay, I guess you're seeing a PowerPoint presentation on which you have some charts.
Okay, yes, we see them.
Okay, great. Now, let me start with my opinions about the euro currency, the euro against the dollar.
Okay.
What I have been doing so far, I mean, lately, I am watching the inflation swap spreads of the dollar and so on. And I see that although the euro dollar is inclined to go up, up to maybe 1.10 or something like that, there's a great chance that the pair may fall in the coming weeks. And let me explain you why I think this might happen. First thing I look at is the inflation swap spreads. I see that, this inflation swap spread is calculated by subtracting the euro inflation swap spreads and then the dollar's inflation swap spread. So it's USD minus euro. As you can see, the USD minus euro inflation swap spread is declining. This suggests that there is less, the nominal interest rates protect against the unexpected inflation much better than the euro. So from this, I jump onto
there's more monetary restriction with the dollar right now than there is in the euro. So the interest, is it about the interest rate differential advantage dissipating?
Yes, that is for now. However, for days to come, if I switch to the next slide, if you look at the spread of the Europe's 2-year expected real returns and that of USA, and we calculated this as euro minus dollar, we see a dollar positive environment, and I tell you why. Well, simply because US expected real return is actually higher than Europe's. So from this we can conclude that for stronger euro, the ECB will need to show more action than it has announced recently. So if we combine these two charts together, these two pictures, the picture one is showing us that inflation swap spreads are dollar positive, simply because nominal rates in the US are adequate for investors to have enough cushion for inflation risk. But that is not true for euro, because inflation risk is higher in Europe than US. So
why?
With this,
why? Because of their vulnerability to energy shocks?
Yeah, there is vulnerability of energy shocks, and there's also supply shock because in Europe
Nord Stream is gone. Everything.
Yeah,
right?
because if in Europe the economy stops, then the supply risk causes higher inflation. So, and also this kind of environment we have not witnessed for a long time. So there's greater inflation. There's greater inflation risk in the Europe than in US. So that's the reason why the USD minus euro inflation swap spreads are falling, and and this implies that Europe's 2-year expected real returns are falling with respect to that of USA. If you look at the chart on the right, which is calculated as euro minus dollar, this suggests that the practitioners, the traders, count on euro because of high uncertainty of inflation.
Got it.
So, so all in all, there's less inflation risk and high expected real return for the dollar, so which is a dollar positive situation, and this leads me to believe that the euro dollar currency, I mean the euro dollar pair may rise up to maybe 107, 108, maybe in the coming days or so. But if the ECB doesn't show much of monetary action that it has announced recently, as you know, Lagarde has told the markets that there are good reasons to increase the rates by 50 basis points or so. But I think they're going to need to do more if they want to protect the euro against any fall. So, so if that happens, they protect the dollar. If Lagarde says we will increase the rates even more, and then we can expect the pair to go up to 121 within this year. But if it doesn't, we may expect this pair to stay in between 103 and 110. So, so that's
all year,
what
huh?
I think about.
Yeah.
Yeah.
You think we could enter those kind of doldrums?
Say again?
In this environment, do you think we could have that kind of stability? I mean, we've been ranging right now. I mean, look at cable. It's been ranging in a 400 pip range for 4 months now, 4 months.
Yeah, look,
So,
when I look at the implied volatility of the euro dollar, I see that it is fairly low.
yeah,
And
really.
well, I can't say if it will rise in the future, but currently the implied volatility, at least for the 3 months, is very low compared to like 6 months ago.
Yeah.
So, yes, I understand that the forces that influence the euro dollar or any pair is very strong nowadays, but those forces are so even that there's a great chance for the pair to remain in a short band. But only if the ECB, I think that if ECB shows more, I mean, willingness to increase the rates even more, maybe another 2 times 50 basis points, then yes, we can then move above towards 120 level.
Okay.
Yeah.
All right.
And
do you factor in any geo risk? Say, the Ukraine war starts going in Russia's favor. Is there any geo risk of people wanting to
you know,
hold
Dale,
euros?
I think that issue, I think is going to extend for a long time. So I mean, I don't know if you realize that, but the war issue is not in the agenda of the world anymore, like it has been in the past 3 months or a year. Now it looks like not like a war in between two countries, but it's like a
World war.
well, it looks like to
Proxy.
me, I feel it looks like a regional conflict and a real war between two continents because the war is happening in a very small and zone.
Well,
I mean,
that's
that's what
yeah,
I see,
interesting to
how I
look
see.
at it that way. Yeah, yeah. Okay,
Um,
all right. So
so
a lot of people are exaggerating the impact on markets
I think
and
so.
talking about the war when
Yeah, I
talking
mean
about the war.
that's
Okay.
that's like kind of an agenda that we should not be looking at. Um, we should be more interested
We
in
should be
the
looking at
economy.
what you're looking at, yield differentials and what the markets are saying in your PowerPoint
Yeah,
slides, and not the newspaper.
yeah, that's
I
yes,
got you.
exactly.
All right. Okay. So was there anything else you wanted to share with us today? We
Yeah,
got
just
the,
if I have one more minute,
yeah.
I want to switch to another issue, which is the financial conditions index spread of the Eurozone and the dollar and the USA. If you
Okay.
the financial conditions index is kind of an index that if it falls, it tells you that there is accommodative economic and financial environment. If the index rises, then there is restrictive environment. As you can see on the chart, that on the white line, this index has been falling for some time, and now it starts to go up, but we're not sure how far it's going to go up. But we see that this financial conditions index shows that there is in the eurozone there is still relatively more accommodative economic conditions. So this means that uh, ECB will really need to, if they want to control the inflation, they will really need to increase the rates more than they have mentioned so far. Yeah.
Okay.
So that's what I
What
wanted
do you
to
think
share.
of the trade of people going outside of the U.S. and Europe, emerging markets? But I mean, since we're talking about the euro, why don't we talk about European markets? Do you think that's the right way to go, based upon what you're seeing, that foreign markets have a bit outperformed the U.S. in the first month or so, and will continue to?
Well, it looks
Maybe
like
you don't
yes,
know.
but because of the strength of the dollar, sorry, the weakness of the dollar, um, what you just mentioned seems to be even more true because the dollar is also weak. So, assuming that the dollar is weak and other markets are performing better than that of US, then what you're saying is, I admit, yeah, there's this.
Yeah.
Uh,
I mean, certainly the tone has changed that even when people are talking downside in euro, they're not talking parity right away or
exactly.
98 anymore. They're talking 104, 103.50. So even targets have become much more conservative in a bearish move in the euro than it used to be.
Yeah,
And
I,
it
I
and it's giving up ground very begrudgingly, having traded it, watched it over the last 2 or 3 months. Don't you think?
right.
Well, you can't get 2
Yeah.
days put together. It's like a chop fest, grinding lower or sideways.
Well, I think looking at at the financial and economic environment in Europe, uh, uh, inflation risk is really there.
Yeah.
But I have to tell you that the ECB has to count the economic economic slowdown to the point where it can impact the supply. Because as we have talked about this before, back in 1980s, what happened in the US is while they were trying to the Fed was trying to curb the inflation, they overkilled the economy, and then the supply issues caused even higher inflation. And ECB is in between too. Would they, if they want to control inflation too much, and then they might risk overkilling the economy. So that's an even greater risk for Europe. So in this case, they're going to be in between. They're going to be they're sometimes going to show reluctance in increasing the rates, or sometimes they will be talking more hawkish. So there's going to be a lot of uncertainty about both financial markets, equity markets, the stock markets, and also the bond markets.
Don't you think the U.S. is in a similar condition?
Well, I don't think the U.S. is. Yes, it is in similar condition, but not as much as that.
I mean, it hasn't the Fed already. We don't even know. Already
well,
overkill.
not
They're
yet.
already too tight. Not yet. Okay.
No, not yet, because
How much higher could they go? How much higher?
I think another 100 basis point is easy to go higher because
Without slowing
unemployment
down
is
the
still,
economy. Yeah.
yeah,
Okay.
because unemployment is still up.
Yeah.
Employment
Well,
is still strong.
We'll see Friday if we
Yeah.
finally have a chink in that armor too. So my takeaway
Yes.
basically is we may temporarily have rallies to 107, 108, but unless Lagarde, goes a half and talks like a hawk for another half, look for euro to fall to about the 104 level, right?
Yeah, exactly. Exactly. You got it exactly right. Yes.
Okay, so I mean that's a great forecast and timely, and appreciate you coming here and sharing it with us. Anything you want to wrap with? I'm best way to follow Okan, and you could tell he's a thinker, and he's looking beneath the surface with yield spreads, etc. Do you want people to contact you?
Yes, sure. Of course. You can contact me on Twitter if they like to.
Okay, give them your Twitter handle, buddy.
Yeah, sure. It's
Go ahead.
It's Okan Aybar. It's OKAN AYBAR.
Okay.
I can actually write
Okay.
on my on the
I
chat. Let me write
I
the
have
message.
I have one more question for you, my trading warrior brother.
Yes, sure.
Okay. Would you like to ride on a beautiful balloon way up in the sky in my beautiful balloon?
Well,
Well,
yeah, I would like to fly.
you're an aviator. You're a pilot, right?
Yeah,
So
yeah.
so anyway, my my trading warrior brother, you are welcome on my balloon any day. All right.
Okay.
And we'll hopefully get shot down, huh?
No. That I wouldn't want to do. That I wouldn't want to.
All right, buddy. Thanks for laughing with me on we're just trying to get the juices going. Appreciate your call and your looks, Okan, and love to have you back. And good luck. I'm rooting for you, and good luck until we talk again. Good hunting, buddy.
Thank you, Dale. Thank you, everybody, for listening to me.
Everyone, Okan Aybar, you could follow him on Twitter at his name, OKAN AYBAR, and he's a thinker. So follow him. I think he's also registered CTA. So check him out. Thanks, Okan. Have a great week, buddy.
Thank you, Dale.
All right, and everyone, you could join the team in 22 minutes on the Morning Edge. And remember, don't just count your pips, count your blessings. And let's have a good week and let the markets come to you. Don't chase anything, okay? So I'm going to wait and see if these metals come to me. If they don't, there'll be something else. Okay? Take the pressure off. Adios.